Hi guys, Forex Trading Tips here, and today I'm going to be talking about divergence, so stay tuned. So just very quickly guys, before we move on to a few charts, the divergence principles are we use either the MACD, the stochastic, RSI or a volume indicator. I use only the MACD, the moving average convergence divergence indicator. It's a good momentum indicator and I prefer it, and I shall show you that in a moment. Now the slopes between the indicator of your choice and the price action, which as I've said we'll take a look at in a moment, must be opposing, as you'll see. Now generally this works better on a higher time frame such as the 1 hour and upwards. Even though you'll get fewer trades, the quality of the trades will be better. Also guys, ideally we need two peaks in both the price action and the indicator that you're using, which will be clearer in the examples in a moment. Also guys, do not chase the initial move if you miss it, okay? Look and wait for another opportunity. Discipline, 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 okay? Don't chase. Okay guys, so as you can see, I've actually put a trade on here. This is the 5-minute time frame, and as you can see, very simple, very easy strategy, this one to employ. As you can see, this is the price action. We come down and we've got our two peaks, so it's almost like a sloping double bottom. We've got our two peaks. Ignore all these indicators for now. I've got another video up for moving averages. Go and take a look at that. Links in the description down below, and also at the end of this screen I'll leave that. But as you can see, we've got our two peaks. We've got this one sloping. If we drew a trend line here, we've got it sloping down. But over here on the MACD, standard settings guys, on the MACD, we've got our two peaks that correspond. So that peak would correspond with this one, and this peak would correspond with that one, but the slope is sloping in the opposite direction. Alright, so what this is actually indicating to us, the MACD being a momentum indicator, is showing us a difference in the momentum of what is happening here. Okay guys, so here we are again on another chart, the Aussie dollar, US dollar, and this time on the hourly time frame. And as I've said before, you tend to get a better signal on the higher time frames. Okay, this is what I tend to use most of the time, the hourly time frame. That's my favorite. So here we are again. We've got our two peaks, haven't we? It's almost like a double bottom here. Okay, we've got come down, big rejection up, come back down another, and then it moves up. So you wouldn't know this at this point obviously, but you would be seeing this here, and you'd be seeing that this has come down to here, same level with that. Alright, it's not quite lower, but if it's level with this previous peak or this previous touch, that's acceptable too, but certainly in my book anyway, and this is a good example of that. So this is level, but this is sloping up, so this is indicating a change in momentum. Okay, the momentum is starting to move up. So here we are, you can see this clearly. You've got our two peaks. This peak here corresponds with this peak corresponds with this, so that's moving up, that's level, it's suggesting a move in the opposite direction, and the rest is history, as you can see. Hourly time frame this, so this would have been a nice trade, especially this here, this candle. I mean, even this candle, this is an engulfing candle, it's engulfing this previous candle with this, and that moving above that line, moving above this line, then it's great. And we've got double confirmation here coming over the 20 period moving average, especially after these couple of little doges. So yeah, that's a good trade. That would have been 20, 40, 60, that would have been a 60 to 70 pip move. I usually trade these up to the 200 moving average or to a price level, which actually is about here, which as you can see it's tested here again. Anyway, that's for another video. So moving on to another example now. So again on the Aussie dollar, US dollar, hourly chart once again, and now this is a slightly different variation, and this is me just sort of taking a look at other aspects of this type of strategy, and I implore you to do the same. Go and check everything, take a look at what I'm showing you here today, go and look on the charts yourself and test it, back test it, look in live trades, so on and so forth, paper trade it, test these things out, go and have a look. So here we go again, but this time we've got 1, 2, we've got about 4 peaks here, look. But it's still like a kind of a one big one there and another one there, and this is our peaks here coming down. It still shows a change in momentum with the MACD indicator. I love the MACD indicator. I think it's one of the best for this. Clearly moving up, clearly moving down now. You can use the 50 period exponential moving average as a confirmation. This comes down, crossed above it, and the rest is history. We've got this and this coming over the 20 period moving average and then dropping past the 50 is a good indication. If you drew a trend line there as well, that would be a good breakout of that trend. Here we are again, this time on the Euro Jappy, and yeah, quite clearly again, hourly chart once more, same thing, got our 2 little peaks. This one's going up, and here we are. Now this is, we haven't got our 2 peaks here admittedly, but we've got a decline in momentum. This is not your ideal setup. I'm just showing you that the MACD does give you a good indication of a change of momentum. We're going up, and then all of a sudden we're now coming down, even though that is higher than this. That is showing a drop in momentum. So that's a good indication that, you know, you can still get 20-30 pips there, okay? So it's worth looking at this stuff. This time I've left the trend lines out for you to see for yourself. I'm presuming that you can see it. This is a good little tester just for you to take a little look at to see. I mean, it's plain as day really. It's smack in the middle of the smack in the middle of the screen here, so I'm sure you can see it. And we're moving up here, aren't we? There's our 2 peaks, our main 2 peaks. We've got this one here and we've got this one, and there's our reduction in momentum, which is going in the opposite direction to this. What's nice about this one as well is you've got like a little double top going on here, which is almost like a double rejection of prices above. You'd have your stop loss here, 150 on this line here, and down you go. I would trade this down to the 200 simple exponential moving average, looking at about a 200 pip move. So that's a nice move there. Same type of thing. This is what we're looking at. Here's that very same chart with the divergence marked up. Here's our line. Here's our line. Both going in the opposite direction. There's our 2 peaks. And there's our 2 peaks, although that second peak hasn't developed completely. But that shows that it's a good indication that momentum is changing and it's going to go in the opposite direction, and there you have it. Okay, 200 pip move, very nice, thank you very much. Okay guys, that about wraps it up for this video. Just trying to make these as short and sweet as I can so as not to bore you and to give you some good thorough knowledge and help and understanding in this very difficult market to make money in. I'd appreciate a subscription, a thumbs up, a like, a comment, anything, just to help me, give me a little bit of motivation to keep doing these. I've got a ton of stuff I want to talk about really, but they just take so long, these videos, they really do, and I just haven't got the time. But anyway guys, look, take care, happy trading, and as I've always said and will continue to say, do not trade with any more than you can afford to lose. Happy trading, take care, see you soon.